Don't buy the wrong property in the right location. Hi, I'm Sam Powell.
And I'm Jaryd Krause, and we're the hosts of the Property Pals podcast Australia. And in this episode, we're going to be talking about how to find the right property once you've actually found the right location. So once you've got maybe 1 or 2, 3 locations, what you need to be looking for in each of those locations to get the right property for you. And we also talk about comparing them. We talk about what amenities are important to be close to or far away from, and why you should be in either of those proximities to those particular amenities.
We also touch on stories about bad investments versus good investments that we've both seen and or been a part of, as well as assessing what costs you may be liable for as the owner of the property, and how to either remove those risks or transfer those risks through insurance and things like that.
Yeah.
Really key nuggets of gold, I think, are in this that I hope everyone gets some good entertainment out of. So it is a great episode, and you're going to love it. So listen on in, and don't forget to subscribe.
Welcome to Property Pals, the podcast where we share everything around how to build a property portfolio, from researching areas, financing, structuring, buying, selling, and reinvesting to live a life of financial independence. As a disclaimer, any information shared by myself, Jaryd, Sam, and the Property Pals team is strictly general and should not be taken as constituting professional advice. You should consider seeking independent legal, financial, and taxation advice from a qualified professional. Hey, we're recording.
We're on.
Hey, pink background.
Yeah, looking pretty.
Pink and pretty. And in this pod, we're going to be talking about how to choose the right property once you know the right location. So if you haven't listened to the podcast prior to this one, go back, listen to it, how to choose the right location. Now we're going to be talking about the asset selection.
Yeah, it's the key part, I feel, anyway, because that's where a lot of people, they find the location and then they feel that, that's the growth location. I just have to buy any property in that location that's going to do well. And the answer is, it will increase over time for sure. However, I want to get that extra 20% of the search criteria and go deeper, because it's going to enhance your, capital growth over time, because they have higher owner-occupier appeal locations. So, let's jump in.
Yeah, there's a lot in this, actually.
Yeah, we'll get through it. I'll probably be less tangential in that way, where I'll just stick to the few things I want to cover, because they're really important, and it's where I see a lot of people go wrong.
Yeah, definitely. So we've gone from 15,000 suburbs, we've found the one, or maybe there's 2 or 3 that we're looking at around Australia, say asset size 500K, investment property. What's the first thing you look at when you go to, if you've got 3 of those locations and you choose one, what's the first thing you start doing? You open up realestate.com.au, do you? And then you start looking through assets. Yeah. And what are the things that we need to look at for these assets? Like, is it, okay, if I've got 500K, what sort of property can I buy in terms of how many bedrooms, how many bathrooms, car space, land size? Is that a thing that you should be looking at first?
Oh, yes. I've hit on a few good points there. So I'll
open that one up.
Let's jump in. So first thing I generally do is you're looking at all these different properties. They're either on market, or they're pre, or they're off market. Depends on your relationships with the agents in that area. But you'll get sent all these different types of properties. A lot of them may look the same, but they're in different locations. So I'll start with the type of location within that, say, suburb you want to focus in on, and then we'll look at the property type itself.
Okay. So location within the suburb, basically. Yeah.
So what I mean by that is, with investing, and even with owner-occupier stuff, you want to enhance your owner-occupier appeal. And what I talk about that is, if you ever go to sell the property, regardless of what market it is in, if you're in a high demand street pocket in that suburb, it's going to be able to, there'll be demand for it, basically, is my point.
So, and also when you sell a property, even if it's an investment property, the likelihood of you selling to an owner occupier is probably higher than investor, right?
Yeah.
So and also investor wants the right location for somebody to live. So you're trying to find a location that is great for a family or that person who wants that type of asset to live in. So things around it need to be great resources and things for them, right? So what are those? What are we looking at there?
Yeah, so I rattled a few off. So quiet streets are really important. I love cul-de-sacs. Kids, as a parent myself now, I fully understand it.
Yeah.
But they generally have a higher, demand rate because it's more private, less crime.
You lived in a cul-de-sac.
Yeah.
I lived in a cul-de-sac.
Yeah,
It's awesome.
They're great.
Yeah.
You can play footy on the street.
Yeah,
shoot basketball hoops.
Yeah, no through roads.
Yeah, they're really good. And low public housing levels are important. We spoke about that in the last podcast a bit, but obviously having the lower public housing, you've got a better, quality of either surrounding tenants or own occupiers that are going to look after their property, which is going to increase that sort of like that net wealth in that area. So your streetscape, etc. Another key point is don't buy on roundabouts. Those they've just got high traffic flow, and also there's kids out there that do burnouts, and it's just a crap place to live. So your tenant turnover will be higher.
Yeah.
Corner blocks. There's a debate around that. Depends on what your strategy is. If you're looking for a potential subdivision play, corner blocks can be really great because they've got a larger road frontage. However, with that larger road frontage also comes increased traffic flow. So have a strategy going in on that one. Transport and schools are a big thing too. So people do like that ease of access to amenity is quite key. So
imagine as a buyer, owner, occupier, or a renter being able to be very close to school and allowing their children to ride to school or walk to school. That's so much easier for the parents, right?
Yeah, well, we did that. Remember?
Yeah, we did.
Ride to school together.
We've got a few funny stories there that we maybe shouldn't share.
When your kids running around. But,
we spent a lot of time on our push bikes.
Yeah, remember your time you actually didn't pedal to school?
Yeah, that's right.
Yeah.
I remember the time I rode, so I had that yellow cruiser bike, and I worked out a way that I could move the bike and not pedal and still. And what about the other bike that I had that was that clown bike?
Oh, the monkey bike.
Yeah, it took me like an hour to get to school on that thing.
Chicks loved it though, didn't they?
It was putting that in the bike rack at school. People were like, "Are you joking?"
Yeah, this guy's a dick.
Yeah.
Hey, it was good fitness for you, wasn't it?
It was good.
Basically, it was probably wouldn't even be a metre long.
Yeah, it was about a metre long. It got a lot of attention from friends and family, and it was a clown bike. It was funny. But aside from that, that's I guess it's important to note. Like our parents bought in a location that was great for us to grow up in, and that's something that's important for asset selection.
Yeah, and over time, gentrification comes through, and the rental yields generally are higher on the places we're trying to invest in. For a lot of investors that are seeking either neutral cash flow or positive cash flow. But then over time, because there's more owner occupiers come through, prices go up. Rents generally don't follow where the prices go. So look at Sydney, the yields sit around 2%, whereas say on the Gold Coast here, they sit around 4%. That's just like Sydney used to be, around that 4% range as well. So that's just the way it generally works. But yeah, getting into like that, I guess, where to buy in that, say, suburb, those are pretty key areas that I definitely focus in on. And then there's also the biggest risk for your asset is going to be flood risk, in my opinion. So don't buy in flood zones. People quickly forget. It's very easy to check it online. So you can check the local government area.
Fire zones?
Yep. Flood. Fire, yeah, definitely. That's sort of like my main investing principles are no flood, no fire.
Okay.
Heritage can limit your...
What's heritage? Just for everybody listening.
So there's...
What's a heritage zone?
Right? Yeah, so councils put heritage zonings over properties to keep the, I guess, aesthetic appeal of that location. So if you go and buy and it's got a heritage overlay on the property, then you won't be able to do certain things to that property from a renovation perspective. And some, like older houses, it might just be that, you've got to keep that, I guess, facade, and that can be quite expensive to maintain and
or sell.
Yeah, and not everyone's looking for that because they want the new shiny, knock down, rebuild, and that you can't do that with that heritage.
And maybe not everybody wants to rent in that investment that you might buy in that area too.
It's not too common unless you're in sort of Sydney, Melbourne, where they've got that older
apartment block sort of thing.
Houses, basically.
Yeah,
they got like it's a beautiful facade, and it sort of holds the heritage of that area, but
they're like those properties with the big stone fences and stuff, right?
Yeah, things like that, like old sandstone built in like the 1900s or even late 1800s.
Yeah.
So you sort of know what I'm talking about if you've ever tried to buy a property that has a heritage overlay, and then you realise, crap, I can't do what I want to do on this property, and by then it's too late, and then you're going to try and sell it, and then if the market's shifted, or you come to realise that people don't actually really want to buy them too much. So yeah, they're pretty key, and then easements as well.
Easements, what are those?
They're access. So an easement gives you it's a portion of that land is required.
An easement's like access. A clearing, right?
Yeah,
a clearing, and the clearing has a particular responsibility in case of a dangerous weather event, or what's?
No, so an easement, like you can have access easements, so people can use your land to get to their land. So it could be.
So that's not attractive for tenants.
It's just say you've got 1,000 square meter block of land, and there's 100 square meter easement on it. You're really buying 900 square meters.
Yeah.
And also, if there's an access easement to the rear of the property, people are driving down the side of your property, so it's less desirable. Other thing too for easements are like water and electricity. So if you're looking at that if you want to knock down that house and rebuild, you're going to be constrained with what you can do on the land because there's easements that are around it, and those easements are, I guess, they're put there by the government council to restrict what you can do on it because they've got their underlying infrastructure below that land.
Yeah.
So that constrains what you can do on it, and it's less attractive. A lot of people do get caught up in that because they don't look, but most contractor sales have all contractor sales will have a title search on it. So read those title searches, seek out those easements, and ask those questions to the real estate agent.
You need to pay for a title search, and there's different places you can go and pay for those title searches. If you're doing it yourself, typically a solicitor will do this, or a conveyancer.
Yeah. Your real estate agent, they'll know. Yeah. It'll be on the contract, so read through that and ask the questions.
What about living next to power plants? They're really healthy for you, right?
Yeah, they're very undesirable.
Yeah.
And in low supply markets like we're in at the moment, and then when the demand's increasing, people are just trying to find places to live. So they're starting to make sacrifices.
Yeah.
Don't sacrifice on easements.
Don't sacrifice on your health.
Yeah, and health. So power plants.
Sorry, easements, yeah, but yeah, health.
A really great example. So we're looking at buying a house for a client in Brisbane, and I was looking at a comparable sale. It had a power plant at the back of it. It was only, it only bordered it by 2 meters on the back boundary. However, initially they had a contract of $866,000 for this property, and then it fell over. The developer was like, "No, I don't want it." That big power plant, and then another owner occupier came in. They were paying $811,000, and then the power plant came through and like, "Oh, actually, no, we don't want that." End up selling for $750,000.
The power plant. So hang on. So the developer said no, and then owner occupier got $811,000 approved offer.
I put a contract on place for $811,000,
and then the power plant said what?
The power plant said nothing, but it's just that once they went in, they got under contract, and they realised, oh, hold on, actually, that's not what I want to pay. And all the comparable evidence is pointing probably that the house would be worth sort of low 800s. However, that power plant, it ended up selling for $750,000. So essentially, that's a $70,000.
How did they get it from a contract of sale from 811 down to 750?
They exited, and then the next buyer came in,
Okay.
and they said, "Well, I'm only going to pay $750 because of that."
Yeah, got ya.
So in their eyes, they thought, "Well, it's a good deal. We're buying essentially under market value." But in reality, when you go to sell that, it's going to be the same problem.
Yep.
And council's not going to be moving a power station anytime soon.
Kicking the can down the road.
Yeah.
Basically.
So that's pretty key. Also, with from a valuation perspective, they still do. They risk up properties. So banks will only lend to a maximum 80% loan to value ratio if you're within 50 meters of a high clearance power line.
Oh, that's really good to know. Because if you have pre-approval for 90% LVR, you can't. Sometimes you might not be able to buy something that's in that area.
Yeah, you'd fall over on finance.
Yeah.
Okay. So that's a key point. What are the health prospects? My wife would say, don't ever buy near a power station.
Yep.
My grandma, she reached 100 the other week.
Oh, congrats! I was going to ask you about that.
Yeah, she's 100, but apparently she used to live under power lines. So
what was it? The 28th or 29th of April, her birthday?
No, it was 28th of March.
Yeah.
Next couple months ago. Anyway.
Yeah.
Time flies when you're 100. Far out. I'm going to be 100 one day.
Well, time has, definitely.
But yeah, so there's some key things on the location of that asset.
Yeah.
So from the land perspective that I wanted to cover off. So really important to understand. The last thing would be the topography. Another fancy word that what does it mean?
Yeah.
It's just the sloping of the land, basically.
So living like on a hill or buying on a hill has its. You can get it maybe cheaper, but it might be a bit more costly to renovate or build on or extend and resell. Yeah. But what else is that? I know there's another thing you need to mention around those as well.
Well, with the topography, so there's the sloping blocks, right? You build a house on it. It is like land still moves, right? Like even if you pour a big concrete slab, you see that concrete slab sink into.
So an investment property that's already you're buying, it's already like a 10-year-old house. That's and it still can possibly.
All houses move, right? Like
land moves.
Yeah. So and they construct the house to be able to move, slightly. Because if they didn't, then you'd get cracking everywhere. That's why you got the frame and the facade around that brick. So my point being here is that the potential maintenance costs are higher on sloping blocks because of, I guess, the pressure that the house is under to be, propped up on the side of a hill. It's kind of common sense on that front.
Or not even the house, right? Like a retaining wall needs a retaining wall depreciates, right? So it might need maintenance. So that might be something to check during your due diligence.
Yeah, and that was one of that's a good point. One of your ones, it was cut and filled in, so the developer cut it through. So they built it back in 2010.
Yeah.
And like when you get those retaining walls that are timber, that just scares me because they decay a lot faster.
I was staying at somebody's house a couple of months ago and looking out the window, the timber easement, or not easement, the retaining wall was no longer existent and it was just dirt. And it was about 500 mil or half a metre from the actual dwelling of the house, from the neighbour's block to of the retaining wall to the house. And they were renting in that home, and the owner had not done any follow up on their neighbour having to resolve that, and that's a huge risk. You
get flooding or something, or a lot of rain.
It's on a sloping block as well, and that retaining wall is sloping down towards that dwelling. If I was the owner of that house and that property, you'd want to make sure you've got a good relationship or things put in place to make sure that your neighbour is making sure that retaining wall is solid, right?
And each state actually has different rulings around who's responsible for that retaining wall. Okay. So Queensland is if their land is encroaching your land, it's for for them to fix. In South Australia, it's the opposite. It's the opposite way around. From what I've learned, I've got obviously property in South Australia, and I was just asking my real estate agent, well, am I responsible if that retaining wall breaks? And he said, no, it's their retaining wall. It's benefiting their land because it's giving them more space. But Queensland, they look at it differently. Whereas if they're on the higher side and that retaining wall breaks down and it's pushing into your property, it's for them to remedy.
Yeah.
Which is, I was surprised by that. But that's what I mean. You learn something new every day, don't you?
Yeah, and that's the other questions you need to ask when you have found maybe, something that's in a quiet street, cul-de-sac. It's close to school, transport, not in a flood fire zone, but you might have that one thing there that you need to be checking through your due diligence before you purchase that asset. I think though, Sam, like I want to dig into like maybe one or two stories that you might have around some assets that you have seen that look good from the get-go. And I know that we've mentioned this one that I just mentioned. You also mentioned the power plant one. But do you have any others where you're like, oh, it looks good, but hang on, no, like there's this that we should run away from?
Good entry into part 2 of this pod where we're talking about the actual asset itself.
Yeah.
Right?
Yeah.
So
Okay.
the key things that I guess answer that question is look at the age of the dwelling. There's a lot of risks around to those older style buildings, so the 1950s weatherboard, especially in Queensland, where the footing systems are actually decaying over time. So you could buy a house that looks great, you pay $500,000 for it. If you own that for a year or two and then there's reports of the footings basically decaying, you're going to have to spend around $30,000 to replace those footings underneath that house to keep the stability of the house. That doesn't increase the value at all.
No.
So, and then another thing, the exact same reason is roofing. So just keep in mind that a lot of the roofing is covered under insurance, so it's great, and the footings can be covered under insurance as well.
Especially if you get a building and pest check.
Yeah, but just make sure your insurer actually covers it.
Okay.
So there's obviously you can't take into that account.
What if you get a building and pest check, and I think this may have happened to you. I think you may have told me a story about this, where you could get a building and pest check and it passes the building and pest check, and then a year later or so, something happens to the building, and it wasn't actually legit approved. Like, can you go to the building and pest inspector and say, hey, you approved this, but clearly it shouldn't have been approved. It's on you to pay for the maintenance.
Yeah, they got insurance for that.
Good.
But different states, different things. So in Western Australia, they're not, they're definitely not covered, or they don't cover those things.
In WA?
In WA. So
lucky my building pest got a lot of things fixed on my last one.
Yeah, but then it also depends on your insurer too. So you got 2 courses of actions. Going through the building and pest inspector would be, and leveraging their insurance. That will be quite difficult because no one ever wants to pay for anything.
Yeah, insurance.
But that's why you get the building and pest inspection, and they're all covered for those reasons. For those, it has to be a pretty glaring reason as to why it failed. An example in WA, and that's why I say that, is that we had a client that had purchased a property through a different buyer's agent, and the roof the roof line was sagging. So the building pest inspector went through there, looked at the whole property and ticked it off. But when you went in there,
okay. So the roof line, as in like the gyp rock and everything,
it was sagging. And what actually had happened is that the gyp rock had come and the frame.
The frame was sagging.
The frame was sagging.
Whoa.
So what they had done is they went to fix it, which is because the building pest inspector wasn't going to remedy it. And the insurer was like, well, you bought it like that. So what they did is the building and pest inspector people, they just went up there and got straps and strapped up the frame back up to the other part of the frame.
No.
And then, all hunky-dory. And for me, I was like,
It's
well, don't, because if you go to sell that property and a good building inspector is going to go through and look at that. They're going to go, well, why is that strapped up? And that's going to deter future buyers. So it was a bit of a interesting scenario that because I wasn't involved in the purchase, obviously my time was difficult, but you definitely felt bad for the person because they've gone and bought a property that is a potential issue. But yeah, that was kind of my experience with certain things in WA. So answer to your question is go through the building and pest inspector first, try to do that. If not, then you get your insurance to try and cover it. But it's always a pain in the ass to try and get money out of anybody.
Out of insurance, especially insurance, yeah. So I guess that's, if we narrow it down to like that, finding that right place once you got the suburb, then you need to do your due diligence on the dwelling. So what are the things you're looking at? You're like, you want to see no sagging roofs and stuff.
No
what
sagging
else?
roofs. Well, go into the asset type of thing. So you're building a pest inspector, like you're not a builder, right? Like you're not meant to know. That's why you pay them to do it. But just go around, even smelling the property, like making sure that the building and pest inspector is doing a moisture reading. That's if you can't inspect a property, but if you can smell, you can smell that like rising damp issue where if it does smell quite moist, then it's not a good sign because mold can come out of that. Really not good for your health.
Yeah.
And also the building decays faster over time with moisture. Water is just it's a tough thing. So,
it's pretty hard to get rid of it once it's there too.
Yeah. Unless it's like your block gutters and things like that. But just clearing your gutters is a key little tip. But going into the dwelling itself, like if you're investing, I try to steer away from 2-bedroom houses because they're just not a high demand ticket item and you're going to get lower rents for them.
Okay.
Lower, like flat blocks are always good, as we talked about with the topography. And if you can do, like, this is going a little bit further into it, but if you've got a 4-bedroom, 1-bathroom house, obviously you can get a reasonable size rent because you've got more bedrooms. But the livability of that property is lower because you've got 1 bathroom to service 4 potential people. I'd rather a 4-2 or a 3-2 that you can convert to a 4-2, which we did with Jaryd, which is exciting.
Awesome.
And then we get to like a 5-bedroom house. If you get a 5-bedroom, 1-bathroom, chances are it's not really a true 5-bedroom. Someone's just put some bloody gyprock up.
And then I love to look at the floor plans. Like I love looking at floor plans and working out how can I put another bathroom in here. Being a previous plumber, how is it close to like the water services and inside development opportunity of the dwelling that already exists rather than adding on top or extension.
And floor plans are key, and that's I've learned a lot about that because families go in and it's how it's laid out. So often, say, a classic case is 2-story houses. If you've got the master and the ensuite upstairs and all the other bedrooms downstairs, a lot of families don't like that because they can't see or hear their kids. Obviously they've got baby monitors and stuff like that, but the flow of that, it doesn't appeal to the mass majority. For families with teenagers, it does because you're like, get down there,
get away from me.
So it's a bit of an interesting case, but I think if you've got a master upstairs, to at least have another bedroom up there is good, or a couple of bedrooms. Like for the 2-story, there's always nice to have a guest room / like 4th bedroom with its own bathroom, or they call them Jack and Jill bathrooms or 2-way bathrooms.
What about pools for investment properties? Are you a fan of those?
No.
Good. Why not?
Maintenance.
Money and maintenance. So if pools are costly for a property investor, what other things are costly for a property investor in terms of maintenance? Are we talking like bushland? We're talking trees. About like
trees over, like a classic case, and I feel prone to this too. I didn't get my gutters cleaned in one of my houses. Like every year, I try to get it done. But for this property, I actually went and had a look.
Is this in
This is in Adelaide.
Yeah.
I went and had a look in like around the gutters, and they looked fine from that sense. And then no one anticipated there was this absolute heavy rainfall. So the gutters overflowed and actually got into the
Came off.
No, the water got into the eaves.
Oh
So
no.
there's a bit of water damage, but I mean, it's not the end of the world. It's just that those properties that have trees overhanging the roof line obviously accumulate more leaves, and that can lead to damage. And also, when leaves get wet, you have moisture. Moisture's a bad thing.
Yeah.
So that's another key point. So
yeah, and like, I guess just I've seen a bunch of properties that have a lot of flora and fauna and the maintenance of it. Like when a tenant doesn't want to deal with it, and then you want to rent it out once they get kicked out, it's harder for you to rent that if it's just looking disgusting out the back or out the front even.
Yeah, that's the biggest thing when you're looking at it is one, what can I increase my rent with? So that's like bedrooms, bathrooms, floor plans, and have a appeal to the people who are actually living in the place. Like that owner occupier appeal. Even if they are renters, you want them long term because it's going to cause you less headaches and less costly for getting new tenants in and paying property managers all their fees to get a new one in. But yeah, tenants and even people in general. I mean, like they're not going to look after the property. Like just take that. Like that's the way it's going to be. If they do, that's amazing, and it's a good reason to keep them. But no one wants to spend their weekends mowing the lawn or pruning gardens and things like that. Like from what I've generally seen, so always try to find those low maintenance properties, and you can get low maintenance plants and things like that.
Low maintenance trees.
Yeah.
Low maintenance flora and fauna.
And if it's heavy trees, cut them down. It might cost you a couple of grand, but I mean. That's actually another key point. Some trees, they've got overlays where you can't cut these trees down. Yeah. So another thing to look into as well.
Yeah. So what advice would you give to somebody that has found the location and they've got 3 to 4 properties that are like, yeah, these are pretty good? What advice would you give to them before they go away and make the final decision? Like, what are the things that they should be looking at comparing?
If they're all in, say, quiet streets, similar price points, I'll be looking for a more, say newer, but there's a certain level. Like anything that's recently built, say 2020, you're generally on the outskirts.
So you're talking anything within the last 5 years built?
Yeah, generally
3 to 5 years.
And also they're building, like I really like, and that's just my opinion, I like the the late 80s, 90s builds, and even early 2000s where they're built reasonably solid, especially that double brick hardwood from the 90s. I love that because it's like they just build them a lot stronger. Yeah. I like them. But also, like, an answer to your question, where is it positioned? Like, if you can get closer to the CBD, you're going to have like lower transit times, and generally when a location builds out over time, most people, like if you look at Sydney's classic example, property prices increase the further you get into the city. Yeah. So kind of have that in mind. Gold Coast is a bit different because Southport's our CBD, and no one really likes. I'll probably be careful there, but it's not the most attractive. You don't come to the Gold Coast.
It's not really a CBD. It's not cool.
Well, the CBD is a central business district, right? So that's where a lot of the business is done. However, you got to understand where you're buying. Whereas Gold Coast it's that beach aspect that people are really driven towards. So if you can find east of that, the M1.
How close are you to the Gold Coast Highway?
Yeah. So noise is a really key thing too. So plane noise, road noise, train noise, like going further into that, like some people just accept that it is what it is. However, if you really want to amplify that, that potential growth is, you just don't want to sit in your backyard and listen to a train go by or a truck go by or something, or a plane.
That's why I couldn't live in Tugun.
Yeah, interesting. Tugun boomed over the COVID because but then there's also like a lot less planes in the air during that period. So And also your construction costs now, if you do knock down under those higher noise. So there's noise barrier mapping for a lot of the local government area town on their planning portals. And with that higher noise location, you have if you're rebuilding or you're building, your engineering specifications are a lot higher, so your cost of build is a lot higher because they're engineering them to keep the noise out.
Yeah.
So something another key thing to know. So answer to your question is proximity to amenities and CBD, and that would be your overarching factor. If you had three and you want to pick one, but also there's three different agents there too. So I'd be going, well, if I can say option one worth 500 grand, if you're good at analysing its value and negotiating, you probably get it for 480. If you then I'd look at the other one, it might be worth 500 grand, and if you can get it for 470, with better terms, then that's an option too, because you're going in and you're buying it, even further under market value. So
you save 10 grand, you could put into paint and carpets and get a better rental price.
Yeah. If they're all in that sort of similar, like if they're all in that same suburb or within say 500 meters from each other, I'd be going for the cul-de-sac over just a normal street, and all those things we talked about, and then I'd be negotiating on all three. Because then you're going to be pitting, like you're not lying at all. That's what I love to do. I don't like all that bullshit that comes with.
You don't like the games. We're not into games. We just like to be straight up. It's like we've got three other properties or two other properties. I'll put a price on this one and put a price on that one. Whichever one ends up being the best, I'm going to go for. It's pure transaction for me. And agents are you're buying yourself respect by actually being straight up front.
Yeah. And you're flipping the script too on that agent, saying, I'm putting scarcity out there, so it's for you and your seller to either lose me or sack up and give me the property for what I'm going to pay for it. And that's where I enjoy that game. Because it's a bit of fun, especially when you get a really good deal for your client. Like you're saving the money, they're stoked, and then it's a really great way to start your purchasing journey and also start your relationship.
I like what you said. It's like you're flipping the script. It's like they're trying to sell it to you and you're trying to get it at a good price. And if you can't get it at a good price and you've got two other deals, you really don't care.
Yeah, takes the emotion
whereas it takes the emotions out of it. Whereas if you only have this one and you really want to make it work just for one of them, then they know that they can take advantage of your emotions.
It's a whole new skill set, the negotiation art. And, I'll definitely get one of my good friends, Scott, on the podcast, and he's a wealth of knowledge.
So saves people a lot of money.
Oh yeah, he's actually he's definitely the best person. He fights for every single dollar. I'm not selling it for him, but I've never come across someone who works so hard just to save a couple of grand. And that's who you want in your corner, I think.
Definitely.
I know, really, but there's other people out there that are really good at their craft, and that comes back to what I guess the whole point of this industry that you're getting involved in is there's good, there's great, and there's shit.
And there is a lot of people that are in property for just the money.
Well, it's a high ticket item.
It's a high ticket item. There's a lot of people take a clip on the way through.
So work with people that are good.
Work with people that are good. That's a wrap, guys. I hope you enjoyed the pod. Make sure that we haven't actually really got people to subscribe, ask them to subscribe.
Oh yeah, we're not good at this, are we?
No, guys, subscribe. You got to subscribe to the pod because we're just getting the wheels in motion and we're going to have some killer guests on. So
and we're committing to sticking to this for however. Well, I'm enjoy doing it.
I'm in it forever. Why not?
Well, maybe we'll be 100 doing this.
We could.
That'd be cool.
All right.
Wonder what we'll talk about.
Well, wonder what our property portfolio will look like at 100. And I wonder how many people we would have helped at that age.
Hopefully 100, but I've already helped over
100? You've helped well over 100.
One a year.
You've looked at what did we work out?
We were saying 10,000. I don't know.
Tens of thousands of deals. You've looked at.
Looked at I took tens of thousands of properties. It's crazy.
It's
I mean, I'm sure. I mean, looked at thousands of businesses.
Yeah.
You've done we all do things, but we all have a niche, and I guess that's the whole reason is to learn, do, teach, share, grow.
Yeah. And to do that, hit the subscribe button. It does help us reach more people to grow as well. And check us out. propertypals.au.
.au. Love it. Australia.
See you guys.
See ya.